there's a cost to getting somebody to the point of a sale, and to
Right.
have it fall apart at the last moment because you can't put the money together, that's not a great thing. It's just
Mhm.
it costs businesses money.
Hey everybody, James Shepard here with another edition of the Merchant Sales Podcast. Today we are talking about consumer financing and specifically white labelable consumer financing that can be utilized by ISOs and agents and even ISVs. And so a very interesting solution by FlexBuy, also an acquisition that they did of Coach Financing. So a lot of interesting things. Actually, later in the episode on Today in Payments, Patty shares a number of interesting insights, but one of those is a survey that was done where merchants overwhelmingly stress the importance of being able to have access to capital from their payment processing provider and even their willingness to switch providers to gain access to capital. And so FlexBuy has a really interesting solution to that problem. And so Bob will be talking about that with us today. As always, this episode is brought to you by Nativia. Head over to nativia.com/CC Sales Pro to check it out. Nativia.com/CC Sales Pro. I also always like to mention that Bob and FlexBuy, they are not sponsors or consulting clients of mine. Just a great interview with somebody in the industry that I think has a really cool product and software. So, with that being said, let's dive into this episode. Hey, everybody, I'm here today with Bob Lovinger, who's the CEO at FlexBuy. How you doing today, Bob?
Very good, James. Thank you for having me.
Absolutely. So it's been a while. I was trying to remember. I think it's been several years since you were on the podcast.
Several years. Yeah, we've been
Right.
around a long time, both of us.
Yeah, absolutely, man. I love it. So for those that don't know you from the last podcast episode, it was a while back. Let everybody know who you are and kind of give us a little bit of your journey of like to what you're doing today and why you started FlexBuy and all that.
Sure, sounds great, James. Yeah, we started FlexBuy 11 years ago, actually, and we're a customer financing platform, fintech platform now. I mean, it's been an evolution. 11 years
Yeah.
ago was an agency for the most part, and now over the years we've evolved into technology and a platform. And basically, we help businesses. Our avatar is businesses that sell a high ticket product or service,
Hmm.
um, that need to have their sales put together. That's about every business these days. If you're
Yes.
selling a high ticket,
Yep.
consumers need help. They need a way of orchestrating their transaction, and that's what we do. So we have a platform where we provide dozens and dozens of lenders as a possibility, as the catalog, and we
Right.
create a bespoke experience for the merchant where they can offer the appropriate financing, solutions that match, their business practice
I love it.
essentially.
I love
And
it.
our recent, over the last couple of months, we just closed on July 1st. We purchased Coach Financing. So, Coach Financing, for those of you that are not familiar with it, established a great reputation of doing exactly what we were doing in the coaching space.
Right.
Mark Beauchamp was their founder. He, tragically, passed away in 2024, and uh, in 2025 we started, discussions about how we can take what we've built and take their great reputation and what they've built and put it together, and that's what we've done. So it's
Yeah.
now we're enrolling between 80 and 100 new coaches every month.
Wow, that's great. I love it. Yeah, and Mark Beauchamp was a friend of mine and just a fantastic guy, great reputation in the industry. And yeah, again, tragic that he had passed away so early on, but what a great guy. So let's dive in a little bit here. I want to go kind of high level first. So let's talk about customer financing in general. We see it kind of, taking off in the U.S. market. Give us some idea of like what you're seeing trend wise in terms of businesses that are adopting this method of payment.
Well, it's interesting because when I started out 11 years ago in this industry, I had to tell people what financing was, because
Right. Right.
unless you were a big box or a certain vertical like retail or healthcare, you didn't know financing existed or that it was available to you as a business. So when we started out, we wanted to democratize it, and make it available to all businesses. And basically, simply it's a way of taking a high ticket and chunking it down into affordable payments. And over the recent years, the buy now, pay later explosion has occurred, right? So
Right.
companies like Affirm and Klarna have, joined in, and so just about everybody knows about buy now, pay later, and many companies are using it to a certain extent, and it's appropriate in some cases and not in others. And it's usually a very narrow solution. So
Mhm.
what we do that's a little bit different is because we have so many solutions, it's not a one size fits all. So every business basically, we look at, and try to frame exactly what they need to capture as many sales as possible. Because, if you're a business, there's a cost to getting somebody to the point of a sale, and to
Right.
have it fall apart at the last moment because you can't put the money together. That's not a great thing. It's just
Mhm.
it costs businesses money. So
Yep.
we've created technology now where we just launched at the same time we were purchasing Coach Financing. We launched our new Bizly platform, which is a transaction hub essentially. And just to frame it, it's think about Roku. We're the Roku for transactions. So we basically are
Mm.
the connection to all the different payment solutions, whether it's, financing, which we offer dozens of solutions, and we also incorporated a payment hub where we can plug in any credit card processor into it, and any payment solution, and it makes for and we're basically agnostic when it comes to who they plug in. We just want to
Right.
give our merchants one place they can come to basically put their sales together. Because what's also happened, because finances in general for consumers has become difficult. Sometimes it's more than one solution to make one sale, right? So somebody may come and they're trying to do a $5,000 or $6,000 transaction, let's say with a lawyer or a doctor, and they may want to put $1,000 on a credit card because that's what they have available to them, and then finance the rest. Or maybe they do something else, and so we want to give them that platform where they can put it all together.
Yeah, yeah, I love it. Well, and I think too, it's a really good fit as far as for the ISO because when an ISO would look at something like, let's say Klarna, they're very narrow, and so like the types of merchants they would work with, types of transactions, the types of finance, it's very very narrow. Whereas for an ISO, they're out there working with lots of different types of merchants, and so they want that. And I think the kind of the orchestration that you have there between the financing and the merchant services, to me that goes back to like what we've seen work with Intuit or Stripe or these others where they have like Stripe Capital, Intuit Financing. And so those types of solutions, it gives the ISO, in my opinion, a way to kind of match that to say, hey, your payment processing is right here. And then, oh, hey,
Yep.
here's the financing that you can gain access to, which a lot of times is dependent in some cases, or at least adjacent to the payment processing volume as kind of an asset.
Right. And we are kind of like Stripe, not obviously a fraction of the size of Stripe, but in the sense of, Stripe does offer financing, but to them financing is Klarna and Affirm. And like I said, that's great. And we have that too, by the way, in our platform. But because we came from the high ticket end of it, I think we're the only platform that takes that entire orchestration and includes high ticket financing. Because you're
Right.
not going to go to you're not going to go to a firm in Klarna for very high tickets, or for people who have credit scores below, let's say 680, 660.
Right.
That's where they're, the typical Klarna firm lane is, $2,000 to $5,000, a prime customer, and that's great. They work great. I mean, I've used a firm, I purchased fitness equipment from a firm, and I was jealous of their process. I mean, it's a very very fluid process. It's just not great for everybody, and
Mhm.
the other thing that we do is, and this is the opportunity that for ISOs, is that a lot of high risk industry companies will go to Stripe to get instantly approved for credit card processing, but we know how it works with PayFacs, right? You get, you get approved. It doesn't mean it's going to stick. So what we can do with an ISO is we can plug them into our platform and offer these high risk businesses an opportunity to get underwritten and get their own credit card processing, where they know that that who they're dealing with understands their needs. And so that's what makes us a little bit different. We're agnostic. We don't, it doesn't have to be our credit card processing. It could be anybody's credit card processing, and we want to plug them in, and we can give the ISO also the whole financing hub, which includes our dozens and dozens of lenders. So it basically opens up their business, because merchants need more than just merchant services. They need
Mhm.
everything, the full gamut.
Mhm. So let's zoom out a little bit here. I want to talk about this kind of process. So when we think about again an ISO, they're thinking about offering this. So let's say that they're selling a furniture store. That's an example of one that has some high ticket. So they want to set a furniture store up for this. A customer comes to the counter, they want to buy a living room set that's going to cost $7,000, right? Help them kind of visualize what does that mean? What does that look like if they want to set their merchant up with this? What would the customer experience be like? Help them understand that.
Sure. So, it can go a lot of different ways. If they want to just focus on the financing side of things, we have a platform that can include all the lenders that a furniture store can use. And even if they have somebody already, we can plug in their existing, let's say they have a Snap account, we can plug in their existing Snap account right into our platform. So we don't have to make it hard. We don't have to say you got to scrap what you're already using. We just want to bring it into one environment so you can have everything in one place. And then we could bring in the other solutions. Maybe they don't have Wells Fargo or Synchrony, or maybe they don't have somebody, in the middle that falls between Snap and Synchrony. So we can fill those gaps and give them financing. And even when it comes to the credit card processing, we can plug the ISO into Bizly so they get credit for all the credit card processing. So it's, they get everything. So now they have the customer still using them for the credit card processing the way they've always done, and now they have the financing in place and they can earn revenue off of that.
Hmm. And when you say the credit card processing piece, I think for my audience might be a little more confusing because they understand, that you do
Yeah,
customer financing, they understand credit card processing. If
right,
I'm an ISO, normally I would go in there and I would either place a point of sale system or I would place a terminal, right?
right.
How would that work as far as when you mean for your platform? Would that still
Yeah,
plug in
so
some way, or what do you mean
yeah,
by that?
so the the terminal integration is phase three in our development. So we're not yet plugged into
So it's for US. You have a really nice
equipment.
solution for a card not present merchant that wants
Card
like a
not
virtual
present merchant,
terminal.
or even merchants that want to do card entry. I mean,
Right,
they
right,
can do everything in our
right,
terminal, but they just can't. I mean, in our platform, they just can't use a
right,
terminal and have it integrated in.
right.
Um, but everything else, they can
Yeah.
do.
And
So
I'm trying to remember because I think you had, was it NMI or you have a couple of gateways that it works with,
we have
right?
a we have a lot of banks and a lot of gateways, and
Right.
most we find that most um, uh, uh, credit card processing will plug in through Authorize.net or NMI. Those are the main gateways, but we have
Yes.
others. We have others as well.
Got it. So to clarify, and again, I'm just trying to make sure they have the picture of what we're
Yeah,
talking about.
I
Yeah. So it's like, so if I'm an ISO and I want to go sell a coach, let's say, and I want to sell that coach on an overall solution. I know financing is really important. For those who maybe don't know, coaches
right.
might charge 10,000, 20,000, thirty thousand
They
dollars,
could.
and people need to borrow money for that coaching service, even if it's 5,000 a lot of times. And so in those scenarios, you could set up as an ISO, I could create a merchant account, get an NMI account, plug this NMI account into your software, give them one dashboard of like, hey, here's your credit card processing and here's your lending platform so they can see the loans that are coming through and get the money from that. And they see the credit card processing all in one kind of unified place. Did I say that
That's
right?
exactly right. That's
Okay.
exactly right. So, the some of the key industries, obviously, we lean heavily into professional services, coaching included, which is, we do tax and attorneys, anything. I mean, we'll do any vertical you could think of, but our wheelhouse is professional services. Home improvement is a great category. Medical is a tremendous category. We have a lot of solutions for
Yes.
healthcare. You know, you know, providers, and that gets dicey because a lot of them have been using Care Credit over the years, and Care
Yes.
Credit is a very narrow band of who they'll approve. So we can create a whole bandwidth of financing for them. So there's opportunity out there, even maybe for ISOs to go out and get these categories that maybe they haven't focused on in the past because they
Hmm.
didn't feel they had a product, but now they can deliver an entire package to, a doctor, let's say, and say, listen, if you're using Care Credit, that's fine. We could actually plug you into Bizly, but give us other financing, and here's some credit card solutions for you as well.
Mm. Yeah, that's great. Yeah, that way, if they're, so as a general guideline here, just rough estimate, if you're a doctor and let's say you're a plastics, surgeon, right? And so that's a common one. You're taking care credit. What do you think the percentage approval is for somebody like that? Just roughly.
You know, uh, Probably about 30%.
Okay.
Probably about
So
thirty
they're
percent.
having 70% are people that
It's
apply
even
for
more.
financing are
It's
declining.
even more than that because, there's a lot of obligatory approvals. So, there's like somebody may apply for $8,000 and Care Credit comes back and says, I'll give you $800 type of thing. So that counts,
Right, right.
as an approval. So there's a lot of opportunity. The healthcare industry is interesting because there's tremendous opportunity. The hard part is getting your foot in the door, right? Because
Yes.
the doctors are not necessarily the business people. People at the front desk run the
Right.
business, and the
Right.
doctor is in the back doing their thing.
Right.
So, from an ISO standpoint, this gives the ISO something to talk about, right? Because
Yeah.
nobody wants to deal with turndowns. Nobody, the front desk person doesn't want to have somebody standing there and say, "Sorry, we can't help you
Right.
today." And
Right.
the dentist say, somebody's there in pain at the dentist office say, "Sorry, you have to go home because we
Right. We
can't do
can't
the
work on your
financing."
tooth.
Exactly.
Okay. And so in that scenario, let's dig into that scenario. So I go to the dentist. I need to borrow $3,000 to get a crown or whatever. So I apply to I go through your platform. Does it like send out and apply to like multiple sources at the same time and see what gets approved, or how does it work?
No, actually, we've because of my experience, and I've seen a lot of platforms, and I've seen the good and the bad. What I've decided was, that waterfalls, and the way a waterfall works is, a platform will set up a waterfall where an application first goes to a prime lender. If it's turned down, it goes to the next one, it goes to the next one.
Right.
There's a lot of nuance between lenders. It's not always cut and dry as to what should be first and what should be
Right.
second, you
Right.
know. So, it's not a perfect solution. So what we've done is we've basically created a marketplace. But to make a marketplace effective is you have to know where do I go to? So we're in the process, and hopefully in the next 30 days it's gonna be finished. We're in the process of putting in pre-qualification AI into the platform. So before somebody does anything, they could put the consumer through a pre-qual AI, and basically the AI will tell them, this is the tier that this consumer is in. They're better off applying here. So, it may not be perfect. We're hoping it's going to be at least 90%,
Sure.
accurate, and they'll know where to approve. So we're going to have, they may have various options, and the other thing we're
Sure.
also adding in to our platform around, and will be launched around the same day, is a stack of instant access credit cards. So it'll be a platform of instant access credit cards that will approve on the spot and then issue a virtual card number that can be used right away. And that's also good for the ISO too, right? If somebody
Mhm.
gets approved and now they're going to, process $8,000 of credit card processing, obviously that's a good thing as well. So, and many of those cards are
Yeah.
going to have 0% offers. So, we're agnostic. We want to offer whatever solutions are out there that helps that business. And,
Sure.
and if we're not doing it, we're going to try to find it.
And so let's talk economics for a minute. So obviously everybody knows how the credit card processing works, I think, on our podcast here. So talk
Yeah.
about the financing side. So you have this marketplace. If I'm an ISO, if I'm an ISO, how do I make money? And if I'm a business owner, how much does this cost? So give us some of the economic side of
Yeah,
it.
so our typical fee is for a business, and we have exceptions. Is we'll charge a $399 one-time setup fee, and they'll earn that back because it's basically a placeholder, and we'll rebate back that as soon as they reach the $40,000 in financing. So it's a $399 setup fee. They pay $49 a month to get access to the Bizly payment platform as a subscription fee, and then they just pay utilization. So then they pay discounts. So the financing works like credit card processing does. There's a discount attached to every transaction, but in financing, the discount varies based on the lender, based on the credit tier, and so forth and so on. The ISO gets paid on the enrollment fee. They get paid when the merchant you know, enrolls with us, and every time that merchant uses the financing. So it's a lifetime. We don't have any kind of poison pill if they don't, nothing that says if they don't use it for 6 months, becomes a house account. It doesn't matter when the merchant uses it over the lifetime. That ISO will get paid on the utilization, and the percentages vary. We have different tiers as far as commissions go, and it even varies between lenders and programs. So,
Right. Right.
typically they'll make between 0.75% on the lowest end to 3% on the highest end. So
Right.
you know it's a broad range.
Yeah, which is good. I mean, which again, I think is, I would say is a little bit better. I would say it's probably double what they would expect on the credit card processing side. So 75 basis points to 300 basis points is their, kind of payout range on this volume that's running through your platform, which is
Yeah.
fantastic. So yeah, I think that's really cool. All
And
right.
they have nothing to do on it either. Once the merchant
Right.
enrolls with us, we don't expect our sales partners, to do anything. We carry the ball after that. We set them up, and they just get paid.
Yeah, love it. Well, that's what they like. So it's good.
Yeah.
So for those who want to learn more about what you have to offer, if the ISOs, number one, is there anything else that we left out that you want to mention to the ISOs? Like, I can't remember. I think you said there is some kind of white labeling, so maybe talk about that. But, and then secondly, where would you send them to learn more?
Yeah, cool. Let me talk. Yeah, I'm glad you asked about the white labeling. Our new Bizly platform is set up in a way where every merchant essentially is white labeled on the platform, and so is every ISO. So if an ISO is set up, we would set them up as a master, and then every account they bring in will be under them, so they'll have full transparency on all of their accounts. And the same thing, as far as merchants are concerned. So everybody
Right.
has transparency. Um, and we have other variations of white labels as well. So we could totally customize, for, based on the situation. Um, they can email me, bobl@flexbuy.com, and I may send them to somebody else within my organization, but I'd like to hear from people. I'd like to hear what the situation is. I'd love, find out, how we can help.
I love it. So that was Bob L.
Yeah.
and then
At
at
FlexBuy with two
FlexBuy.
X's. Yep,
Yeah, I was
as
gonna
my hat
say.
says, Flex.
So if you're listening and not seeing his hat, there's two X's in FlexBuy, and it's flexbuy.com.
Yeah.
Yeah, Bob, thank you so much. I always enjoy catching up with you. I feel like the customer financing market is just really exploding, and I think we're going to see the one thing I think will be an interesting shift will be the ISOs are starting to really get into card not present. They really have struggled with that. They've really been more card present, but a lot of them I'm talking to, they are starting to go after these verticals that are, service even card present, but it's different verticals they haven't gone after. Medical, like you mentioned, attorneys and professional
Yeah.
services. I think about even like field services, HVAC, so I think they're starting to go after
Exactly.
these verticals where this is more of an opportunity for them. And so I think it's going to be interesting to see how the next few years play
Well,
out.
even some of the businesses, there's like hybrid situations, like a healthcare practice, obviously deals with somebody face to face, but if somebody knows they need money for a procedure, they may fill out the loan application ahead of time to see if they qualify, and then
Right.
and then come in. So
Yeah. Save
there's a
some
lot of
time. Yep.
there's a lot of ways to utilize it, and if there's use cases we haven't thought of, we'd love to hear about it, and then create a solution for it.
Yeah, that's great. Bob, thank you so much for your time today. Really appreciate it.
Thanks for the opportunity, James. Appreciate it.
So the big news this week is that Fiserv is opening up the Excel debit card network that it owns and
All right.
operates for purchases at cannabis dispensaries.
Oh, wow. Okay.
This is a big deal, because it's like I don't need these all the time. I only need these.
Sure.
The fact is that there's no major acquirer has been able to service what I call pot shops, because of not only because of the federal legal issues, but Visa and Mastercard just outright forbid it.
Right.
But Fiserv owns this network Excel, which, let's see, what is it? It has something like um 3,100 financial institutions participate on Excel,
Right.
and about 300 merchant locations are served.
300 merchant locations?
Excuse me, 3 million.
I was
3
going to say,
million
I was like, okay.
yeah,
Yeah.
sorry, 3 million merchant locations.
Right. Right. Okay.
So I mean, the cannabis market is huge. I mean, consumers spent an estimated $15.2 billion at state authorized pot shops last year. By 2028, the estimated spend is expected to reach $171 billion. There's been lots of one-off solutions that usually get cut off at the knees. They've been like prepaid cards, digital wallets, and cashless ATMs, which we've talked about a few times on here. But we're up to about 3 dozen states that have legalized recreational and/or medicinal uses of cannabis. So there's dispensaries in 3 dozen states.
Right.
So basically, so cardholders, people with Excel cards can make card present, pin based, mag stripe purchases at cannabis dispensaries where it's legal. Fiserv is also partnering with financial institutions through that are on the Excel network to support issuance of debit cards to licensed pot shops. Now
Got it.
they can't be used. They can't be used to actually pay for pot, you know, but they can
Okay.
be used for ancillary services, you know, like
Sure.
so that's a big deal. I mean,
Mm,
we're gonna. I think I know that we've talked here in the past about some some places. I think Fiserv was even one of them that would support CBD,
right.
but this is like a whole order of magnitude greater than that, and
Yeah. Yeah, for sure.
I think it's going to blow the market open. I mean, if Fiserv's going to do it, then other people are going to follow. They just
And
have to
so
be
So let me just make sure I understand something. And you may not know the answer to this yet, but if I'm understanding what you're saying correctly, are we saying that now ISOs that work with Fiserv, ISVs that work with Fiserv, they now have a way to offer payment acceptance in
I can't say for sure, but it sure sounds like it.
like in a very limited way, right? So it'd have to be like,
Sure.
hey, there's one kind of debit card. Because the reason I'm saying that is what I find really interesting about that is I would think that a secondary business that's going to come out of this like today, somebody is going to start a huge issuing side, right? Because
Right. Sure.
if I own a pot shop, well, I want to be able to issue my customers this debit card
Or I
that
want
they
my
are
well, or I want my customers to have this debit card. So maybe I'm going to pay,
right.
uh, pair up with a local bank that issues
Right,
those
that
debit
issues
cards.
those cards. But again, I would say I would imagine someone is, I'm sure many people are already thinking this, but somebody's going to come up with a closed loop system here where they're going to be like, oh, well, like Fiserv is a good example of that. It's like, well, we can issue these cards that can be accepted and we can accept these cards. And so
Right.
there's a lot of extra money to be made there because you're issuing and accept and acquiring.
Yeah.
And so I'll be very interested to see who comes out with that. And again, it sounds to me, and I could be wrong. This is the first I've heard of it, but it sounds to me like there's probably a closed loop system here that Fiserv could either create or, more importantly, that they could facilitate. So that if
Exactly.
there's a lot of ISVs already out there that are servicing these business types with point of sale
Sure.
solutions, right? And they're doing cashless ATM or whatever else, they could come and say, "Oh, hold on, wait a minute. We can issue cards." So when your customer says, "Oh, you don't take card," it's like, "Well, no, we do take one kind of card, but it's
Right.
only this kind. We'll issue it to you here. Let me scan this QR code, download our app, and you can get a virtual card right now that's
Right.
on this network." You know what I mean? So there's going to be things
And if
like that
my
coming.
if my memory serves correctly, there's already a lot, these 3,100 financial institutions, a lot of them are sort of in the central part of the country. So, look at the back of your card. If it says Excel,
Right.
you can do it.
Right. Yeah.
And
Very
I think
interesting.
that's what they're going to do is that, you don't take cards. Well, let me see your debit card. Oh, yeah, we do. We'll take this card because they'll look at the back of it,
Right.
see the Excel,
Yeah.
and say, oh, yeah, we can do that.
Right. Or they might even just, swipe the card in the terminal and it'll come back declined or approved based on if
Right.
they accept that
Exactly.
type.
Right.
There's so
Yes.
the other thing that's interesting is too, it sounds to me like ISOs and acquirers that want to take advantage of this, they're going to have to rethink a little bit with their merchant applications and things in terms of
Right.
it. To my knowledge, I personally haven't, maybe I just haven't seen it. I don't remember seeing a merchant application where you could get that granular. It was like, do you want to turn on PIN debit or not? Whereas
Right.
in this case, it needs to be you want to turn on PIN debit for Excel. That's it.
Right.
So
Right.
that's another level of granularity that doesn't really exist right now, at least on
Right. It
merchant
doesn't
applications.
exist, but it wouldn't be that hard to
No, not at
make
all.
it work.
Like I said, I
Right.
think this is going to be a scramble where it's like, man, if this is what it is now. There's going to be a
Yeah.
scramble. There's going to be a lot of new businesses pop up, a lot of innovation, and it's
Oh
going to be
yeah.
good. So
I see, with them doing it, that now I see some, the other, especially the larger, um, the larger acquirers that have access to, you know,
yeah. Well, and the larger acquirers that have an interest in this high risk vertical, they're gonna
right.
they're gonna be all over this.
Right.
So
And then,
yeah.
I mean, it's a lot of money not to have, I would think
Yes.
the interest is going to be there eventually.
Oh
It's
yeah.
like
Yeah.
who's going to be first
Yeah.
to the
Yeah.
gate. So,
Wow. Very interesting. All
yeah.
right. Well, we'll see what innovative companies pop up as a result of this
Yeah.
disruption. So yeah, I like it.
I'm real intrigued to see what happens
Yeah.
with this. So,
All right.
now,
What's
here's an
next?
interesting one that came up for me. The attorneys general in 44 states, they've written to payments companies seeking help in reining in computer generated non consensual intimate imagery. That's a mouthful right there.
Okay.
Commonly known as deep fake pornography or revenge porn.
Okay.
Apparently, these computer generated images have increasingly been used to embarrass and exploit people around the world. Not only like notable people, people who we've
Sure.
heard of, like Taylor Swift, for example,
Sure.
was a subject of one of these. But apparently, they're also used to like intimidate young people,
Hmm.
teenagers,
Okay.
teenage girls especially. The letter was issued by the National Association of Attorneys General, and it was sent to the legal counsels of Visa, MasterCard, American Express, PayPal, Google, and Apple Pay.
Okay.
And it asked the companies what they're doing to ferret out deepfake tools and content, quote, if at all. And they're also asked for commitments not to be, quote, complicit in the creation and spread of these deepfakes, such as allowing them to access the authorization and payment processes.
Hmm.
Now, I came upon this interesting, the lead the lead attorney general, state attorney general, is from your state, Pennsylvania.
Okay.
Um, and he issued a press release saying, this is something we're really going to be focused on. And it said, quote, payment platforms typically have terms of service and acceptable use policies that prohibit the use of their services in connection with harmful content. At times, they've taken action to remove the ability for sellers to accept payment for other services that are related to harmful content. And this is harmful content, so they should be
Yeah.
doing something about it.
Hmm.
In addition to that, letters were also sent to the three major search engine companies,
Right.
what they're doing. I reached out to MasterCard, asked them what they were doing, and a spokesman suggested in an email that the company's on the same page as the AGs.
Hmm.
Quote, he said, quote, we have zero tolerance for unlawful activity on our network. When we see or are made aware of specific instances of such activity, we investigate the allegations and take action to ensure compliance with both local laws and our rules and standards. So,
What's a really interesting caveat to this, Patty, and I'm trying to remember now the country because I saw it recently and I can't remember what country it is, but there's a country, it's a smaller country. They are coming out with the concept of, I can't remember, I wish I could remember how it was worded, but the idea that in their country, a person's face, image, etc., is like trademarked to them.
interesting. Wow. Yeah. So you can't replicate it.
Well, and so yeah, by doing that, any sort of
Right.
replication in that way, even included their voice. It was very, very
Uh-huh. Yeah,
interesting.
that in this, this computer generated, these deep fakes
Right.
apparently can also be audio.
Well, of course, yeah, it's going to be all
Yeah.
that, and so, but I think what they kind of made that move because they wanted to make it to where, sure, it's obviously criminal to do things that are predatory or whatever, but then they
Right.
also made it to where there's a huge financial implication if a
Right.
company is even if a company enables a user on their platform in that country to do a deep fake of somebody else, they're infringing upon, again, I don't think it was called a trademark, but it kind of that concept. They were
Right.
infringing on this
Right.
person's right to their own appearance and
Their own
audio or
image.
whatever.
Right.
Um, so yeah, I think, this is interesting. I think obviously the deep fake stuff is going viral. I think it's going to be interesting to see what, if anything, the card brands can really truly do about this. I think
Right.
I think ultimately there needs to be, you know, some really long, detailed conversations in Washington about all of this, and there need to be laws that are made about the
Right.
use of these deep fakes and what is, what is illegal, and again, also what is, um, where is there a financial obligation, right? So I think that's going to come
Right.
into it as well.
Right.
But
Yeah.
yeah,
And financial liability, I think more.
exactly. Yeah, right.
Yeah.
That's the right word.
Right.
Yeah,
More to the point. Yeah.
yeah.
But
Okay.
I was, I'll be honest, I was unaware that this had become, so prevalent
Pervasive.
that
Yeah.
that
Yeah.
the I mean, you get the attorneys general of that many states,
Right. It's a big
coming
deal.
together. That's a
Hmm.
that's Republicans as well as Democrats.
Right,
You
right.
know,
And I feel like too that's kind of the tip of the iceberg in terms of like, yes, this is a very extreme version of what's being deepfakes are being used for, but of course they're also being used for so many other things. You know, people are doing fake job interviews. I mean, there's just a million things, right, that are happening
oh
along those
yeah,
lines.
oh,
So it'll
it's
be
really kind of scary
it
how
is.
many things are being done.
Yeah.
But
Okay.
I thought that
What's our
that
next
one was
one?
really interesting,
Yeah.
especially because brings in the card companies.
Yeah, it is. Yeah.
So another thing that I came up with is I've come across a couple press releases and stories in the mainstream media about how consumers are dialing down their use of credit cards after a pandemic related surge that this blows my mind pushed balances above $1 trillion.
Wow. Hmm.
An article in the Wall Street Journal reports that credit card spending is growing more slowly than debit card for the first time in 4 years.
Yeah.
Credit card spending grew 7 times as fast as debit card spending back in
Mm.
the pandemic and after.
Right.
Based on data from MasterCard and Visa, debit card spending rose 6.57% during the first 6 months of this year, compared to 5.5% for credit cards.
Hmm. Interesting.
But here's the thing, in addition to the bump in debit card usage, buy now, pay later has, quote, exploded among consumers, the
Hmm.
journal reported. Uh, that's good news for buy now, pay later company Klarna. That's the Swedish
Yeah.
based one that's planning an IPO for this fall.
Yeah. Good timing.
The company's expecting to raise up to $14 billion. Now that might sound a little, that's interesting because the BNPL market is valued at 18.02 billion as of last year, and it's projected to grow to 60 billion by 2035. 10
Hmm.
years from now, in 10 years it's going to what? Almost 5 times, grow by almost 5 times.
Hmm.
Um,
Wow. Yeah.
So anyway, I thought that was really interesting
Yeah, it is
because
interesting.
we've heard about the Klarna, because Klarna, I believe, I'm pretty sure, in fact, yes, I know this for a fact, they had planned a IPO back in April,
Mm.
but when all the stuff started happening,
Hmm.
they pulled it back because they were like,
There's
this is
also
not.
there's also some regulatory concerns swirling around them too, as far as
Oh yes, oh yes.
fraud and everything. You know, so I think there was a lot of things they had to button up, but I think the timing now is perfect. So
I
that'll be
think,
a good one.
and especially, like I said, especially with credit card stuff,
Hmm.
charges
Yep.
going back. So we have one final one, which I thought was really interesting, an article in Payments. They apparently collaborated with WorldPay on a report and found that 9 out of 10 businesses view access to embedded financial products as critical to their businesses.
Wow. So
Yeah,
just let's clarify that for a second for the audience. So you're talking about as a merchant, I want to be able to log into my payments dashboard or whatever and see, oh, access to capital,
yeah,
card issuing,
yeah.
financial, whatever. Yeah.
Whatever. Yeah.
Okay.
And here's the number really caught my attention. 37% of small and micro businesses said they were highly likely to switch to a payment provider that offered embedded lending.
Mm, wow.
And that kind of like takes, I know that you've talked a lot about embedded payments.
Hmm.
That's a big thing with you.
Yeah,
This takes it like one step
it
further,
does.
you know?
Yeah.
And I can see that that's pretty logical. Think about like, merchant cash advances, right?
Hmm.
I mean, that would be a perfect, next step from offering, embedded payments.
Yeah, for sure. Well, and again, too, it's the embedded concept, right? It's
Right,
it's the idea of like I can log into my dashboard and I can borrow money. You know, you look at Intuit has this, Stripe
right,
has this,
sure.
Square has this. This is
So
something
why,
businesses are just coming to expect that they're going to get
right,
access to capital as a result of their recurring revenue streams, and those are running through payment rails. So,
yeah. And then, and if you're not on top of that, you're going to lose that battle
yep,
to the
absolutely.
likes of Square and Stripe. I mean, yeah,
Yeah.
I mean, the Intuit stuff gets me. I mean, every time I log on to QuickBooks to do something, they're like, "You need some money,"
All
you
right.
know?
All right.
Like,
Absolutely. Wow.
And if I was not you know, a a lone proprietor, if I didn't,
Right,
if
right,
I had, a lot of payroll to meet and stuff like that, that would
right.
be very tempting.
Yeah. Yeah.
Yeah.
Hmm.
Yeah.
Wow, very interesting stuff. Well, yeah, we'll keep talking about that trend because again, it's um, I was reading a book recently written by a futurist,
Uh-huh.
they call it, and he was
Always,
talking
I always enjoy those.
I do too. He was talking about how, the importance of, you have like innovative technology and disruptive technology and things like that.
Right.
But where you really have opportunity is when you have multiple disruptive technologies that come together.
Right.
And I think that's what we're seeing now is we're kind of seeing this confluence of like integrated payments. And then it's like, oh, also people are starting to understand the value of that recurring revenue as collateral for debt, and they want to be able to borrow money. And then there's like the idea of, really, really easy user interface. So they want to be able to have their mobile app and they want to do it all from there. And so a lot of pieces are kind of coming together. And
Right.
I think the companies that win are going to embrace that. And I think we're going to see more companies coming out for this kind of the ISO agent channel that are going to
Right.
bring them truly cutting edge solutions. And I'm excited to be playing a part in that and excited to see other companies that are as well. So it's a really
Yeah,
exciting time to
it's
be in
going to be an
payments.
exciting time for this. You and
Yeah.
I have talked about this in the past, but I have friends that'll be like, why do you write about payments?" I'm like, "Man, first of all,
Yeah.
it's the grease that keeps the economy going, but
Right.
second of all, I've been doing this for decades and it's constantly changing.
Yeah. Always something new to talk about and write about. Yeah.
Always something new.
Yeah.
Always something.
Well, Patty, we always appreciate you putting in this work in and keeping us up to date. Thank you so much for all you
Yeah,
do.
my pleasure."